This is the first year that Sibos is in the Middle East, so it's great to be in Dubai. And of course, one of the big topics across the Middle East is Islamic finance. And we have a panel now of guests to talk about exactly that. Joining us to discuss is Rushdie Siddiqui. He's the Managing Director of Azka Capital. Also with us, Michael Bennett, Head of Derivatives and Structured Finance at the World Bank, and Puan Norishikin Kazim, Head of Treasury, Bank Islam Malaysia. I hope I said that correctly. All right, let's start. I think let's put everybody on the same page. When we say Islamic finance, define that for me, because there are differences in different parts of the Islamic world. If I could ask you to start, Rushdie, with that.
Sure. The way you would look at Islamic finance is a table, and a table has legs to support it. One leg happens to be in the area that a transaction must be specific, so there can't be speculation. Another leg would be there has to be certainty, so things that are uncertain, such as derivatives, cannot be part of Islamic finance. The third is it has to be ethical, so sin-free. And the fourth is interest. So if we look at Islamic finance as a table, it's got four legs from the point of view of no speculation, no uncertainty, has to be a tangible assets, and has to be free from interest. And in essence, that's what Islamic finance is.
Okay, so Michael, he says it can't be derivatives, but you are head of derivatives and structured finance at the World Bank. So what kind of products are we looking at?
Yeah, well, I think, I definitely agree with that general definition. I think what's important for the World Bank, because we're a development institution, is looking at the potential of Islamic finance to fund development objectives. So for us, we would say an additional aspect of Islamic finance is the actual proceeds or the use of the money going to goals which Islamic investors could see being very much in compliance with their values and beliefs. So for instance, we're at the World Bank very interested in creating Islamic products that go to fund things like women's education or health or infrastructure in poor countries that not only in the sense of form meet the requirements of Islamic finance, but also in terms of their uses meet the actual objectives of Islam and of what the investors would like to see their money go to.
And how much of this investment are you seeing? And tell me a little bit about the context of growth. How has it grown over the last few years, and where do you see it going?
Well, the market generally has grown at a tremendous pace. I mean, we see surveys that say 15-20% a year, some years even more. But I think it's important to note that it's still very much a niche market, even with all that growth. We're talking about a market that I've seen estimates of being, let's say, 1.5 or 2 trillion US dollars in total. And just for comparison's sake, just the 401k market in the United States is about 4 trillion US dollars.
Wow.
So when you're talking about a market that is still very much a niche market, of course, it would be unfair to expect it to be ready to solve a lot of the world's development problems that I'm discussing. And in fact, in Islamic finance, it's only at the very, very beginning stages of addressing those sorts of problems.
Puan, tell us what you're seeing in Islamic finance from Malaysia, where you sit.
Right. Well, Bank Islam is one of the oldest Islamic financial institutions in Malaysia, and Bank Islam is the oldest Islamic bank in Malaysia. So we've been in existence for about 3 decades. As what was mentioned earlier by one of my fellow speakers, Islamic banking is still a relatively new market, been in existence only for about 5 decades compared to conventional banking, which has been there since the 15th century and started off in Italy. So in Malaysia, which is one of the hubs for Islamic finance, from our experience, we've seen that the growth has been very encouraging. From Bank Islam's point of view, it's been growing about 15 to 20% per annum. We've seen it develop tremendously. So at Bank Islam, we've seen products for banking, which is now complete. So it goes from the asset as well as the liability base, which includes even Islamic hedging instruments to address our customers' needs to hedge against market exposures.
So break it down for me, some of these products. So if I said I want to engage in Islamic finance and I come to your bank, what will be some of the products that you offer me? You'd say, Kavita, well, we have a range of options. Take me through what are these options are. If I
Right.
wanted to buy a house or, take me what some of those options are.
Right. One of the unique characteristics of Islamic banking is that the relationship between the bank and the customer is not a borrower and a lender. It's always traditionally been principally based on an underlying asset or commodity. So it could be a profit sharing venture between the bank and the customer, or it could be a leasing arrangement between the bank and customer, or it could be a buying and selling arrangement between the bank and the customer. For example, on the liability side, the bank has a product whereby the bank shares its profits with the depositor on a monthly basis. So a profit sharing ratio is determined upfront, and on a monthly basis, the bank announces its profits, and based on that profit sharing ratio, a profit is then given to the depositor. And compared to a fixed conventional FD, we found that a long-term profit sharing deposit product has been more advantageous to our depositor than compared to an FD because of the profitability of the sharing between the profit of the bank and the customer. So on the asset side, on the flip side, similarly, we also have similar products. So for example, where we have house financing products, for example, the bank will enter into an arrangement with the customer where the bank buys the asset, the house, and then leases it on to the customer. So it's a purchase and a leasing arrangement as opposed to just lending outright to the customer. So it can be, like I mentioned before, it can be based on a profit sharing basis, it can be based on a leasing basis, or it can be based on an asset sale and purchase between the bank and the customer. So that's a very fundamental difference between Islamic banking and conventional banking.
And innovative products. Tell us about how, where is the innovation now in this area of Islamic finance?
Well, innovation is subjective, much like calling something ethical. If you want to talk about innovation, you talk about thought leadership. And thought leadership is generally coming from Malaysia. And there's some interesting stuff looking ahead. So Michael's involved with derivatives, but derivatives can also be used to mitigate risk, which is very important as Islamic finance grows cross-border. What we want in Islamic finance is it to be conventionally efficient, but not necessarily conventionally complete. So on the equity side, there has been trial balloons raised for an Islamic hedge fund, but that balloon popped, right? We need to move towards microfinance, SME finance, awqaf, and these things because they're going to result in financial inclusion of the non-bankable. And so that's innovation as opposed to turbocharged products.
Let's talk a little bit about if we are moving to microfinance. I think banks at the moment, it's I think 42% of MFIs are financed by institutions. So what are the kinds of things do we need to see from institutions in order to make microfinance, that he's talking about, grow across the Islamic world?
Yeah, I mean, microfinance has been a big priority at the World Bank, and we've done a lot of lending in the financial sector in that area. I think what's important is that although Islamic finance should be a more ethical form of finance, it doesn't have to be, and we have to be as aware of the potential problems with microfinance when it's done in an Islamic Sharia-compatible form as a conventional form. And we have seen, unfortunately, with microfinance generally, extremely high rates of interest charged, unsustainable amounts of debt, although very small, but still unsustainable amounts being taken on by customers. And that's something at the World Bank we're very, very concerned about and looking at all the time when we look at expanding any new area of microfinance, including in Islamic finance.
If I can interject, one of the areas that the World Bank and the media needs to think about is the Arab Spring talked about people who didn't have access to money. If you look at the North African countries, farming, agriculture is a big part. And sukuk, or Islamic bonds, roughly equivalent, are an important part of Islamic finance. It's become the poster boy, if you will. It would be very interesting to see the World Bank issue agriculture sukuk, use the proceeds to help that particular sector.
Come back on that.
Yeah, it's definitely something we're looking at. The issue for us is that right now on our asset side, all of our assets are conventional loans. So we haven't ourselves been able to issue sukuk in our own name, but we are working with a number of countries to see if they will take our financing in Islamic form, and then we'd be able to raise the money also in Islamic form.
I want to talk about another hot button issue when we talk about Islamic finance, and that is the lack or the need for more talent coming in to the industry. Is that something that you're worried about, or?
That is an Achilles heel of Islamic finance. We have been talking about this ad nauseum. The last 15 years, we need more talent, we need more awareness.
How do we get more talent?
We get more talent by basically pay. There has to be a financial incentive. Second is the companies that are involved in Islamic finance, these companies have to reach out and talk about truly CSR. It can't be just about prohibition of interest and not investing in pork. It has to be a holistic approach that my values as a potential entrant in this space aligns to what the bank is doing. So I would be interested in going to this space and working for this institution.
Okay, well, we've got to leave it there. Thanks very much for joining us. Very interesting discussion, and I'm glad we've had it here in Dubai, because it's the first time we've had Sibos here in the Middle East. Thanks very much for joining us. Enjoy the rest of your conference.